Hi all, it's Catherine Burgess with Burgess Group Compass. We're talking about last week's Boulder County real estate numbers, the Home Purchase Sentiment Index by Fannie Mae, and how that relates to what is happening in our local market. So last week we had 104 listings come to market. That was a little bit lower than what we saw in 2019, which was 119, and in 2018, which was 135. And those, in terms of month supply of inventory, it was 1.2 months supply of inventory last week, 1.6 in 2019, and then 2.1 in 2018. So then the under contracts came in just between where 2018 and 2019 are, kind of in the middle. And so very much still in the realm of what has been normal in the last few years. Then if we look at the price bands, as you may recall from other videos, we've had this kind of up-down with quieter buyer activity, more buyer activity going back and forth. So 2 weeks ago it was a little quieter. This past week it popped up again, and we saw all of the price bands above the balanced market towards the buy side, and but in a healthy realm, nothing out of the world there. So we'll take that. And from the national standpoint, thinking about that Home Purchase Sentiment Index, that is part of the National Housing Survey that is created monthly by Fannie Mae. And it's a leading indicator. It helps us understand how people are feeling about the buying and selling process and how that may translate into numbers. So in this case, we learned that sellers are robustly confident and feeling great about the selling process, and buyers are feeling pretty beaten up and beleaguered. And we are particularly seeing that at kind of the base level of an income of $50,000 to $100,000, which the most recent census tells us that the US median income falls into that range. So that's our broadest category. There are the most people looking for homes there, and they are having trouble. It is a frustrating and difficult market at that level. Then as we go up and start to look at the experiences for people at higher price points, we're also seeing frustration. We have some we have some buyers at the high end of the market who are looking for a value buy that is proving extremely elusive. The 1.5 to 2.5 range is very competitive as well, and our buyers are generally able to get under contract after one or two contracts, either on their first, second, or third. They're usually going under contract. However, when we are representing sellers and multiple offers come in, many of the buyers are representing, or their agents are representing, they've missed out on 5 or 8 or 10 listings. So there is a frustration in that segment of the market as well. And so it's a time for buyers to really have emotional durability, and it's hard to do that. It's hard to not get invested when you are making those offers on those big purchases such as homes. So we are, however, seeing, I think, what represents a very positive mindset in the mortgage numbers. The lock rate for second homes is more than double what it was in the pre-pandemic time. So that indicates that a ton of people in the luxury sphere are getting under contract and moving forward with these second home purchases. And I think we might want to speculate on if that second home market is what is propelling our median price point in the Boulder area to these record highs. So in the past several months, we've seen our median price point several $100,000 to $700,000 or $800,000 above our normal rate. And We don't know if that will continue to be the case or if we will see it regress eventually back to the pre-pandemic levels, but we're definitely having an impact. Okay. So just wrapping up that idea about the buyer demand possibly diminishing, the important thing there is that the buyer demand is really related to our appreciation levels. So if buyer demand goes down, it's likely that our appreciation will slow. So we'll try to keep track of that as the year goes on. Thanks. So if this has been helpful to you, please like, subscribe, and share, and we will see you again next week. Thanks so much.